Hi guys, this is short video to just show you how to handle some of your short put spread positions when markets are doing something like that, basically kind of crashing down, and it doesn't seem like they're gonna go up anytime soon. They may, we don't know, but looks like they're crashing. So if you run into trouble with this, with some of your short put spread positions, and you're approaching your short put position, strike price, what to do? Should I roll out and down and out, so down in price, strike price, and out in time to recover some of the premium and take a loss? Or are there some other techniques? And I'll show you just one, which I used here with JNJ, because I sold short put spread on JNJ, 10 contracts, 14 days till expiry at 135, and look where JNJ is right now, 135.73, very close to that line. So how do you handle this? How do you handle, do you actually roll it? No, I didn't roll it. I did another technique, which is simply called Delta Hedging. And what it means is, if I just bring JNJ risk chart here, it's already handled here. That's how my position looks like. You see, we're very much in the shitty spot here, and soon, if this keeps going down, we're into big trouble, right? We don't want to run into this kind of trouble where the loss is going to thousands. So what can we do? What we can do is basically bring that slice here, and select the current price here and figure out what's our delta exposure here on this position. And it looks like it's 162 delta, right? So what does that mean? How that means that if the position of JNJ moves by 1 point up, we're making 163 bucks. If it moves $1 down, 160, like right now 164 down. So how can we protect ourselves from losses now? Well, the technique that I'm going to show you is called Delta Hedging. So you remember that number 164. What it means for us is 165 exactly now. That's even better. What it means for us that if we want to neutralize this position and not be afraid anymore of this falling down further, we can actually simply short 165 shares of JNJ, and this will make that delta completely neutral. So if it keeps going down, it will not hurt us a lot. And I already done it here. You see, I shorted when the delta was actually 160, so I sold 160 shares of JNJ. Of course, this involves a little bit of your margin. So if I put that back in, we'll see what happens. So you need to have currency on your account in order to create this kind of hedge, Delta Hedge. So always remember, have some currency there to handle positions. And you need to see what happens now. Look at the pink curve. If JNJ decides to drop to 130s tomorrow, it doesn't hurt us a lot, or practically nothing. If it keeps coming back, it's okay. It doesn't hurt us as much as well, the short position, and we may exit it at some point of time. I actually set a stop loss at around 137.5. You can see this on the chart. Here's my stop loss, and I just have 60 shares back. So I'm not completely closing it because, I don't know what's going to happen. Maybe it keeps going down again. Gradually, I will be closing my short position in order to, come back to the winning position here on the time, on the theta. We had quite some theta on just this short put spread. You see, we can actually make 1.1K on this just from theta. But at the point where we're right now, we're actually showing loss. So if I do that, we're still in theta positive zone, meaning this is going to go and bring us up to that level, 1,140. If we go up, no problem. I mean, the short-term problems are handled. Long-term problems we can manage later on, all right? So I simply bring that back, buy that back as soon as I see that JNJ comes back to the area of profit. I have 14 days for this to expiry. Easy. So in order to do this, what would you do if you want to short that? Again, you look here at the slope, this slope, and whoops. And at this point, it's 164. That's what you need to short. So you're gonna go to trade, delete that stuff. You come here and you just say, okay, I want to sell, 160 shares, and then confirm that order, and then you're gonna get filled, and your risk chart becomes something like this. So this is one of the ways that I wanted to share with you how to handle, short put spreads going really bad. and you don't always have to roll down and out. You can, but you can also do delta hedging. It's fantastic technique. I really like this, and I really recommend this to you. So happy trading, guys. I hope this is very helpful in the times like this. Take care. Talk to you soon.